This is the briefing for Friday, August 18th. There's a lot to unpack from this week's trading, and I'm going to try and do this as quickly as possible so as not to take up too much time in this briefing. I'm going to start with the longer term development of the market. And the first thing that I want to talk about is really last weekend's briefing and going into last weekend's briefing. There was a clear indication that the market internals were weakening, and I discussed this in the briefings, that there was basically a higher probability that we were going to see a move to the downside unless or until the internals corrected and supported price, which typically happens around a news event. And unfortunately, we did not get a news event, and we had a market that started to sell off. Paused at important support level. In the spiders, it was 445. Took a couple days, about 4 or 5 days, before we saw a breakthrough. And then, of course, when we got the breakthrough, the price accelerated to the downside, coming pretty close to this 430 level, which is the next level of support in the spiders. Going back to this final move here into this high, you can look down here at breadth and you can see what was happening. The breadth was declining pretty dramatically. And even on this day where we opened higher and closed lower, you can see where breadth was on that day. Now, breadth was declining more or less going into the low today. We had an increase in breadth in today's trading. But I want to point out that while looking at the lines of breadth here, it looks like breadth was fairly strong, but this is the S&P 500. It was only 88 shares positive. So there were more than 400 shares that were negative in today's trading, as opposed to only 88 positive. So I would not view this as a strong day, but we certainly have to keep in mind, because trends develop, and they develop over a period of days, at least in terms of a daily chart, and it is fractal in nature. So basically, when we look at this, we know that this took probably 2 weeks, 2 or 3 weeks to develop as the internals declined, and then of course we got the move to the downside. The other thing is, in looking at this, that this is a rounded top, and rounded tops typically occur at trend ending moves. So this would suggest, and it's not 100%, but this would suggest then that this rounded top is the end of this trend breaking out of this area of rotation, and that we're likely to see a continuation of lower prices. Now, volume did increase on today's trading, and we did have an up day. You can see that 52-week highs minus 52-week lows basically was flat, but it's still negative 316 shares, and this is in the NYSE. Looking at where we are in terms of the, I should say that support, important support in the spiders is at 430, and then below that is 420. Now, I want to say that 430 is important, and it is, but 420 is even more important, because once we get back into this area of rotation, we're looking at the potential to trade down to 380 if and when that were to occur. Now, looking at the Qs, you can see the same thing here. We've got a rounded top in the Qs. You can see that this 372 area, we rotated just above it. Then we spent a few days rotating just below it. And then, of course, the extension down right down to the 356 area, which was the next level of support. Flat volume in terms of the Qs. And the same thing occurred, basically. You can see the deterioration in breadth going into this high, which was the high for August. And then, of course, breadth was back and forth, but mostly lower. Only 352 out of more than 3,000 shares in the NASDAQ were positive today. So we need to keep that in mind when we analyze these charts. In terms of the Russell was stronger today than the other indices. And you can see that it came down close to testing this 180 level, bounced off it. Volume ticked up, breadth ticked up, but only 402 shares out of 2,000 were positive today. So that means that the rest were negative. So it's going to be important to determine what happens on Monday, because we are at critical levels of support not quite reaching there, but close enough that we have to expect some type of bounce or some type of pause before we see a breakthrough. In terms of overbought and oversold, we were basically extremely oversold on the 15th of this month. And then, of course, I guess that was 3 days ago. And then, of course, over the last couple days, we worked that off. So we're basically neutral and neutral in the NASDAQ. A little bit of divergence in volume, though. This is total volume on the NYSE, and you can see it increased today, but total volume on the NASDAQ decreased today. So this divergence gives me a little bit of heartburn, mainly because typically in a counter trend move, which today appears to be, volume will fall off. It will not increase. So while volume fell off or continued to fall off in the NASDAQ, it did not in the spiders. I'm sorry, in the NYSE. This is NYSE volume. I correct myself. So it's going to be interesting to see how that divergence reconciles itself going forward next week. Now, looking at the other internals, the percentage of stocks above their 50 and 200-day moving averages, you can see the deterioration that occurred here. Now, even going back here, this is S&P 500. So you can see that this low was at 28.61, and you can see where price was right here. Price was right in the 417, 418 area. So this would suggest that the price development to the downside has a little more work to do before we even get down into this area here. Same thing's occurring in the NASDAQ. So you can see that on this low back through here, we were at the 3662 area, and right now we're at the 50 area. So you can see that we've still got some way to go in terms of price development. A little bit of tick up in both of them, but nothing that I think would suggest that we're at an intermediate term low. In terms of the NASDAQ, same situation here. You can see the deterioration that occurred going into the low of or into the low of today, and in the 200-day moving average, the same thing occurred there. In terms of the Russell, you can see the breakthrough here. This was a rotational pattern on the 50-day moving average, and you can see the breakthrough that occurred on the 11th of August. Which that was last week sometime, I think. That was last week. And then, of course, the 200-day moving average, you got a little bit of tick up also. You can see the rounded tops a little more clearly on this as well. So basically, the important aspect here is that we have broken through important support and reached another level of support. So the important aspect is that what was support is now resistance. So 445 in the spiders, very important resistance area. 430, very important support area. In the NASDAQ, 372, 373 area is resistance now. 356 is support, and then below that is going to be about 323, 324. In the Russell, resistance now comes in at 190, and then support comes in at 180. So it's going to be very, very interesting to see what happens in terms of tomorrow, and in terms of whether this is a complete counter trend rotation or not. Now I want to bring this down into a little bit shorter time frame. This is my charts on the 15-minute basis. Now I use a 15-minute chart. When I first started trading, which was probably over 30 years ago, I mean, everybody day trades, or they start out day trading, and you use a 1 minute, a 2 minute, a 5 minute chart, and typically you're in and out and in and out. I learned over a period of time that I do much better on a swing trade. So when I go into a trade, I want to go in for a little bit longer period of time. Typically, I'll be in for a day, maybe a couple days. But typically no more than a week in any one trade. And I use a 15-minute chart because I don't get whipped around in terms of what's happening with the market or with the instrument that I happen to be trading. Now, you can see here, you can see this was the opening 15-minute bar here in terms of the of the spiders. So, and you can see there was a divergence in breadth. And in last night's briefing, I warned that we were approaching an oversold condition, and and we were approaching support levels that are very important, and that we have to anticipate some type of pause going into any lower low below yesterday's low. And that's exactly what we got in today's trading. And you can see that breadth was diverging. And of course, then we had no follow through on this 15-minute candle. So basically, if you change this to a 5-minute chart, you can see here is the open here. And you can see that breadth was down to about 1,200 shares negative. So on a 5-minute chart, you would think initially that price is going to continue to go lower. So if you had waited, then on a 5-minute chart, you'd have seen there was no follow through and breadth started to increase. On a 15-minute chart, you never would have seen this. You never would have seen how low breadth was at that point, and you would have seen much clearer on a 15-minute basis that there was really a fairly decent divergence in breadth, whereas a 5-minute chart on that first 5-minute period did not show a substantial divergence in market breadth. Now, looking forward, typically we have to try to understand whether this is the end of a trend because we have reached important support levels, or whether this is a pause because markets run in pause in all degrees of time. And if it is a pause, then what is the degree of this pause that we're seeing? Now, typically, and those of you who've been listening to these briefings for a while understand that there are some characteristics of countertrend rotations. One, I suggested a little while ago, is that they occur on lower volume. And this certainly in the spiders was not lower volume, and then of course in the NASDAQ it was lower volume. The other thing is, one of the characteristics, not all the time, is that they happen in 3-step moves where you get a leg 1, a leg 2, and then a leg 3. And the same thing appeared in the NASDAQ today. So this appears right now to have the characteristics of a countertrend rotation. The issue for Monday and potentially Tuesday is this done, or is there another more complex countertrend rotation that's in the process of developing, where this is a 1, 2, 3, 1, a 2 would develop, and then a third leg back up again that would complete a countertrend rotation on this move. If this is done, it gives us tremendous opportunity for the coming week. If this is not done, then this low will hold, and we'll see some type potentially coming down and testing this low here, which comes in right at the 434.75 area, and then we'll see some type of another move back to the upside, where this would be leg 1, leg 2 would come in this way, and leg 3 would be next. And that would all occur without seeing a lot of strengthening of the internals. Now, based on the equality between legs 1 and 3, in the spiders, the first leg here is 3.54 points. So from this low to this high is 3.54 points. If you take this low here at 434.75 and add 3.54, it projects the completion of leg 3 at 438.28. So, and then if you look at where this high is, this high comes in at 437.57. So less than 3/4 of a point it made here. Now, we have to be careful because Monday we could see an additional move to the upside that would carry it up to 438.28 or even up to 439, because there doesn't have to be equality, and it's not it doesn't have to be exact. The numbers don't have to be exact. It's an area that we're looking at. The same thing occurred in the Qs. Now you can see here the low here to the high here is 3.07 points. And then if you add 3.07 points to this low, which is 356.12, you get a projection of leg 3 at 359.69. And this high came in at 359.41. So that was pretty darn close to completing equality between legs 1 and legs 3. So going forward, we know from a longer term perspective, we are at very important support levels. We have to expect a pause or a bounce off of support, which is exactly what we got in today's trading. So far, the pause or the rotation up does not appear to be impulsive. It does have the characteristics of a counter trend rotation. The question facing us is that if that is the case, then are we going to see another leg down where this is more complex? This is 1, 2, 3, 1, another leg down, and then a third leg up, or are we going down completely? The key to that, if this low is taken out, that increases the probabilities dramatically that this is one and done. If this low, the low of the second leg is taken out, that suggests the higher probability that this low is going to get tested. And if that low is tested, it typically will increase the probabilities of it being taken out as well. The condition here, the problem here is that if this develops into a complex counter trend move where this is 1, 2, and 3 comes, this low could get taken out slightly before we see the rotation back up again. But you have to watch what happens if that happens and what happens with breadth, because if that low is taken out and breadth is falling or fairly negative, then that would suggest that we're going to see this low tested, the low of today tested and taken out. If breadth is not declining pretty dramatically, then that would suggest that we're potentially developing into a three-step counter trend move. Volume is very important also. So watch what happens with volume. On an impulsive move like this, you're going to see volume increasing. If volume is not increasing on this move to the downside, then that's going to be another clue that the probabilities are we're in a complex counter trend move where we see 1, 2, 3. I hope this helps everybody. It's going to be a very, very interesting week next week, especially if we break the daily support levels I discussed at the beginning of this briefing. Have a great weekend, and I'll pick this back up for subscribers on Monday.